I am officially a millionaire. Congrats, dude! So, when are you buying the Lambo? Oh, nah, my 2011 Accord runs just fine. Besides, I only have like $5,000 in the bank. Oh, well, surely you're gonna buy that new mansion with the saltwater pool. Oh, nah, our current place is almost paid off and it's the perfect size for the family. I don't get it. You're not buying a new Lambo? You're not buying a mansion? You don't even have $1 million in the bank? There is no way you're a real millionaire. Quiz for the audience at home. How could someone be a millionaire without all those items mentioned above, least of which $1 million in the bank? Ding! Answer, net worth. And that is what we're talking about in today's video, specifically what your net worth should be based on your age. And of course, I'm gonna give you some of my pointers and focus items so that you can boost your net worth for your particular age bracket. Though, if we're talking about net worth, I should probably define it for you folks. So net worth is pretty straightforward. You take all of the assets in your life, you subtract out the liabilities, and that is the magical net worth number. Assets could be things like equity you have in a home, the amount that you have in a retirement account. Heck, you could even throw the value of your Pokemon cards in there. And for the uber rich, sometimes it's the value of the company or the stock and options that they have. On the liability side, you would have things like credit card debt, student loans, outstanding mortgages. So oftentimes when you hear about the uber rich having a $10 million, $100 million, $1 billion net worth, it's not common at all for it to be cash in the bank. Oftentimes it's tied to some sort of asset with some incredible outsized valuation. And throughout this video, I'm gonna be talking about both the average net worth as well as the median or the middle number. It's very important that we talk about both because averages can be skewed by the uber rich. So let's say you have 3 people in a room. Each person has a net worth of $100,000. Then in steps Elon Musk. Elon has a net worth of $230 billion. So if you have 4 people, and let's just take the 230 billion and you divide it by 4, does that mean each person has a net worth of 57.5 billion? No. However, if we just look at the average of the 4 people, yes. That's why averages can be skewed, especially when you have the uber billionaire class. And so that's why it's important in this example to also consider, okay, what's the median or middle number when it comes to net worth? So 100,000, 100,000, 100,000, 230 billion, the middle number, somewhere around that 100,000 range. It gives you an idea of something that's a bit more representative of that population. So for each category, we're gonna break it down as such. 1, we're talking about the age group and what's going on in that age group. 2, we're gonna talk about the net worth, and I'm gonna give you the median as well as the mean. And of course, I'm giving you the 1% because who doesn't want to know whether or not they're in that 1% bracket? And the last point I'll give you is going to be the focus of what I think someone could do in this particular age bracket to try to boost their net worth. If that sounds like a plan, folks, pop a squat, tap that little thumb icon, and let's go ahead and dive right in. The first age bracket, 18 to 24. I'm jealous of you folks because this age group, unlike all the others, has one key advantage: time. You have all the time in the world. Don't rush it. You're either just starting college, just in college, just graduated, just into your first corporate job. Don't rush it. Slow down, enjoy it, but keep in mind, here's where we're gonna start building some of the core foundational principles that'll truly start accelerating your net worth as you move on forward. So, net worth. The median net worth in this bracket is $8,216. The average net worth is a little bit higher at $28,707. This totally makes sense to me. In fact, I was thinking maybe it's a little bit more positive than I would have thought, because for folks who had gone to college, you know that thing is prohibitively expensive and you probably are straddled with a ton of student debt. Nevertheless though, those who might have maybe not gone to college, well, you probably wouldn't start off in such a negative position. In the top 1%, their net worth is $435,076. But in this age, I would certainly not focus on trying to have a net worth of close to $500,000. That is certainly the exception to the rule. Focuses for this group. The first one, school. I'm gonna call a spade right now. I see it all over YouTube. Don't go to college. College isn't worth it. You should never go to college. You should do this, that, and the other thing. It's BS. For the majority of folks out there that have the ability to access higher education, do it. Because I'll pull up this graph right here, and as you can see, folks with degrees as well as advanced degrees significantly out-earn those without. That's it, it's a pure fact. Listen, I understand college is not for everybody, but there is this narrative being pushed that, oh, don't go to college, just start your 7-figure dropshipping business. BS. For the majority of folks is get the degree, get the job, invest, work, retire. That's it. It doesn't have to be more complicated than that. The next thing you want to focus on in this period is developing high value skills, interpersonal skills, sales skills, communication skills. It's not so much a sell me this pen, but it's can you sell yourself on the job opportunity? Can you sell yourself to your boss for the promotion? That is the type of stuff that you want to start working on as early as possible. Honestly, even things I know it sounds so crazy, but like cold calling. I think part of the reason why I'm successful in doing what I do is I've taken a lot of the skills that I've built during my kind of corporate career, rolled it into social media, and one thing that I do different than a lot of folks is I will cold call brands. So if I like a brand, I will literally pull up the person's contact and email and I will call them and say, hey, I love you, would love to work with you. I know that's something not a lot of creators do, but I can certainly say I've landed a handful of opportunities that would have not existed had I not done cold calling. The other skill that I learned kind of through my sales career is negotiating. And I will certainly say when I take a look at some of the opportunities that I have in terms of working with brands I really like, I can say for certain I negotiate at a higher rate simply because of the fact that I'm comfortable negotiating. But of course, I wasn't born knowing how to negotiate. In fact, I never thought I would be in a corporate job doing sales and then negotiating. If it were up to my parents, I'd be a doctor somewhere. These skills are things that you want to learn as early as possible because it is absolutely going to pay dividends as you go ahead and career up and age up. The next big focus in this age group, folks, get a credit card. Trust me. Get a credit card, learn how to use it responsibly, pay on time, pay in full, because it's not so much the travel rewards, razzle dazzle. No. This is so you can start building your credit, because having a strong credit score, that is gonna save you later down the line tens, maybe even hundreds of thousands of dollars in unnecessary interest payments. Now let's talk about the assets and liabilities that I would see most folks having in this age bracket. Assets. Honestly, you're probably just working your first job, so you'll probably have something in a checking account, something in a savings account. The second thing, retirement account. Folks, if your company offers a 401k, which is basically a company-sponsored retirement plan, and they offer a match, take it. It is literally free money. When they say, hey, if you put in 6% and we'll put in dollar for dollar up to 6%, put in the full 6%. They're literally giving you free money on top of it. And when it comes to a 401k, make sure you're investing it. Don't just put money into a 401k because that's just an account. Then you have to take the money and invest it. And as far as investing, let's go ahead and practice the muscle memory. And what that is you're gonna buy and hold. That's it. And you're gonna look at low cost, broad-based market index funds. If you can start working that muscle memory in that, okay, I'm contributing to a retirement account, I buy low cost market index funds, you are well on your way, trust me. Now let's look at the liability side. For this age bracket, for the most part, there's not a whole ton. The one thing though, I'm gonna put a very stern warning on, no credit card debt. Someone's gonna come to your school, someone's gonna pitch a student credit card. You have to understand, if you use a credit card, you're using the bank's money. It's not your money. Pay it back in full. Do not ever carry a balance on a credit card. Period. The other thing is student loans might be playing a factor, though if you're going to grad school and you're deferring, it might not be a huge factor just yet. Next age bracket, 25 to 29. This is where things are starting to get a little bit spicy. So likely you're starting to move out, considering moving out, or if you're smart, you're probably still living at home with your parents. Regardless though, you are at a point which you're out of school and you are starting to make some real money. Net worth. The median net worth at this age bracket is $7,512. The average net worth is $49,388. And the top 1% is $606,188. Ooh, that is a pretty penny. This is surprising maybe to some folks, and I thought it was interesting, but it totally makes sense why the median net worth did not move that much from the 18 to 24 group, because all that student debt, well, that thing is dragging you down. So what are things to start focusing on here? Well, this is the period in which you're starting to make some real money. And with that, you should really start considering how are you actually deploying the capital that is excess to what you need to save for either paying off debt and emergency fund. For me, in this age group, at the age of 26, 27, is when I started looking at real estate. My goal, forever in a lifetime, is I wanted to retire early. My goal had always been I wanted to be retired by the age I was 40. And so I probably started a little bit late, like looking at real estate. However, this is when I got into my first property. I got in with a 3.5% down FHA loan where I lived in one unit, I rented out the other, and then after 12 months, I moved out, got the other unit fully rented, and now that thing cash flows about $1,100 to $1,200 a month. Some of you are probably thinking, well, you got into real estate when interest rates were like 2%. Yes, I did. However, I also got into real estate 3 months after the pandemic. Basically, when everyone said the world is ending, you shouldn't buy real estate, who knows what's going to happen. Obviously, a couple months after that, then there's a huge spur, prices went through the roof. But what I'm saying is, folks, there's always gonna be naysayers. As long as you're confident in running your numbers, you understand the income side, the expense side, real estate is probably the biggest wealth accelerator, especially at this stage in your life, because you're going to have the time to wait for the asset to appreciate, as well as pulling in some of that sweet cash flow. The biggest thing about real estate is leverage. Here's the thing, if you wanted to go buy $1 million of stocks, and you just went to the bank and said, hey, listen, if I gave you $35,000, will you give me the rest in form of a loan? The bank will say, absolutely not. However, you wanna go buy $1 million property? You can do that with the bank, and they will allow you to lever up basically, what, 96.5%? That's the crazy thing with real estate. You're putting in little, someone else is putting in a lot, but you get to keep the whole pie as long as you ended up running your analysis correct. So it's not lost on me that yes, I'm gonna be skewed towards pro real estate, but that's just what I've seen. As someone who doesn't come from a family who just gave me money, and I kind of had to just figure it out along the way. The next thing I want you to focus on is building good financial habits. You should have already been doing that between the ages of 18 and 24, but here is where it's absolutely important to get rid of the bad habits. The bad habits being things like impulsively investing in the hot stock ticker that your buddy just told you about. Things like day trading, options, basically anything that seems like a get-rich-quick scheme. Things about, I don't know, buy low, sell high, time the market. That stuff just does not work. At this point, especially for something like your retirement account, it's the boring, slow, unsexy way that's gonna get you to that millionaire status. However, you need to practice that muscle now. Warren Buffett said it best. Be fearful when others are greedy, and greedy when others are fearful. At the end of the day, at this age bracket, you have a very long investment time horizon. 30, 40, 50 years. What happens to the stock market over a 40-year time horizon? It goes up and to the right. So at this point, you wanna get into the core foundational habits of investing regularly in dollar cost averaging, and specifically, you want to look at low cost, broad-based market index funds. If you've got an itch, if you need to go buy a single stock for whatever reason is, go do it. But that money better be money that you could give me to light on fire. But if it's not, then you need to cut it out. The next thing I want you to focus on in this age group is experiences. This is gonna sound very counter to everything I say because all I'm talking about is save, invest, save, invest, save, invest. However, don't pass up on the opportunity to have some great experiences with family and friends because oftentimes these things are gonna pay you dividend later on in the future when you recall old stories of this trip or that trip or whatever experience that you might have had. In addition, this is the age right before like the major responsibilities kick in, so don't skimp out on that. Now, I'm not saying spend, but don't focus too much on just the head down, bull forward. That's kind of what I did, and I don't regret it necessarily, but I definitely would have taken a step back and been more open to more experiences with more people. Some of the assets you might have at this stage, hopefully your first property. Second thing, a brokerage account that you're growing sizably, having a 401k that you're also contributing to regularly. Some folks, if you're lucky, you might have gotten stock options or stock grants or RSUs, and if you haven't already, consider maybe is there a potential to add an additional revenue stream. Now, my suggestion was real estate, but in this stage, is there something else you can do to supplement your income if your income is not delivering enough for you? On the liability side, what I most frequently see here is student loan debt. You're likely gonna have maybe a mortgage obligation, but if you structure it as a rental, then you're not gonna have a huge burden to bear there. And I hope, and I pray none of you have credit card debt at this stage or ever, but that is certainly something we would see across the broader population. The next age group that we have is the 30 to 34 group. This is the age group that I've just entered and I'm feeling it. At this point, your bone's a little bit creaky, back's a little sore, and I'm just kidding. The median net worth in this age group is $35,112. The average net worth in this age group is $122,700. And for the top 1% is $956,944. So what's going on in this age group? Well, for one, largely family. Folks are probably getting married, folks are probably having kids, and you're probably buying that forever home, which is a relatively large expense for a ton of people being tied to a $200, $500 million mortgage. But what I would focus on at this point, if you're in the corporate world, is the fact that you're early, getting to mid-ish career, but still early on. Don't settle. If you're not getting paid fairly, make sure that you are aggressively every single year getting a raise, and make sure that the raise is not just inflation adjusted, or in this case, under inflation adjusted. Folks, inflation this past year is what, 6%, 7%? If you're getting a pay raise of 2%, 3% because that was the historic inflation adjusted raise, you're getting paid less money to do the same job. And if you continue doing that, well, you're forever going to get paid less. And so make sure that you are aggressively, year over year, at least getting the proper inflation adjustment, which for these past years are probably 5 or 6%, which might seem like a big ask, but companies need to pay it up. Because if cost of living is up 5 to 6%, why am I not getting a 5 to 6% raise just to keep up with the cost of living? So what kind of assets do people here typically have? You likely have a property. Hopefully, if you've done it right, you have multiple. Your retirement account and your investment accounts are growing. You might have some stock options or maybe even equity in some company. And lastly, I hope maybe at this point, some of y'all might have some sort of side business or side hustle that you've started to grow. On the liability side, it's probably gonna be mortgage, it's probably gonna be student loans, potentially 1, 2 cars. The next age bracket you have is 35 to 44. The median for this age bracket is $91,300. The average net worth is $436,200. And we can further subdivide this category into 2 brackets for the top 1%. So the top 1% of net worth between the ages of 35 to 39 is just a little bit over $4 million, while the top 1% in the 40 to 44 age group has a net worth of $7.9 million. At this point, those net worth numbers absolutely have to do with some sort of small business, whether it was a small business that was sold, a small business that is being run, but whatever it is, to get to those numbers at this stage, you need to have some sort of business in which income, quote unquote, is not gonna be gated by some sort of arbitrary salary band. So what are the focuses in this group? Well, to put it bluntly, this is the boring middle. This is the part that it doesn't seem like much is happening, but a lot is happening. What I mean by that is your kids are largely getting older, and so make sure you're spending time with your family. In addition, the investment habits that you built early on are really starting to kick off, and you're really starting to see the effects of compounding. You're starting to see that net worth number tick, 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 tick. In addition, you might have 1, you might have 2, but the properties are starting to add up, and you're also seeing the equity gain there as well, leaving you options for cash out refinances, leaving you options for HELOCs. Yes, it's gonna be boring, but what you're seeing at this stage is all of the good habits you built early on are now starting to pay off. And for those in corporate, you're getting to the stage of middle management, late middle management, where you're starting to vie for executive, vice president type of titles. Gung-ho to you, just make sure that you're politicking appropriately. The next age bracket is those between the ages of 45 and 54. The median net worth here is $168,600. The average net worth is $833,200. And for the top 1%, there's 2 subcategories here as well. So for those between 45 and 49 is $10.5 million of net worth. And those between 50 and 54 is $13.5 million. So what would we focus on in this group? Well, I would be remiss to say, and you probably can tell, that I am not in the 45 to 54 age group. However, what I do understand is at this group is where you are in your peak earnings years. And so making sure that you are, again, practicing what we said earlier, effective investment management, maybe you can look at a little bit more in terms of exotic investments. For me, if I had a good chunk of cash, maybe I might look at syndications for real estate, where I'm just putting forward the money and getting the return versus actually having to go around acquiring properties. Though if it were fully up to me, in this age group, I'd be kicking back, having a Mai Tai on a beach somewhere. I'm kidding. Obviously, you can't retire into nothing. Probably gonna be running a scuba shop somewhere in Southeast Asia. And the final age group we'll talk about here is the 55 to 64 crowd. The median net worth here is $212,500. The average net worth is about $1.1 million. For the 55 to 59 year group, we see that the top 1% has a net worth of $17.5 million. While for the 60 to 64 age group, we see that the top 1% has a net worth of $14.6 million. My theory here is, as they're getting over the age of 60, they're probably spending, they're passing it down more, and so that's why you see a decline now in the net worth. So what's the focus here? At this point, folks, it's your golden years. It is retirement. It is kicking back, enjoying time with your family, with your grandkids, with whatever hobbies, with your pets, with your friends. This is the time now. All the hard work should have paid off, and you should be in a good position. Now, so I know some of you are workaholics, you're gonna keep doing projects, totally fine. Now, I will say, life doesn't just stop at 64, start at 64. In fact, you should have been living throughout. Remember earlier I said in your 20s, you should be taking on those experiences? Well, you should have been practicing that throughout your entire life. And I do recognize that there are age groups over 64 that are going to have obviously net worth figures, but for the purposes of what I feel comfortable speaking to, this is where we're going to end the video. What I really want to do with this video is kind of share with you a little bit about my observations and my experiences kind of as I'm going through this thing called life, I guess, and trying to help folks the best I can, because I personally didn't have this type of guide or any sort of pointers. Cool, folks, this has been a great video, a little different, but hopefully y'all took something out of it. Comments, questions down below, and I'll catch you all next video. Peace.